everyone, and welcome to today's HFTP ProLinks webinar, How Hospitality Can Successfully Adopt and Sustain Lease Accounting Compliance. Today's webinar is sponsored by Visual Lease. I am Brittany Brewster, along with Barbara Cimarero, and we are coordinating today's webinar for HFTP. Are you confident in the progress you've made towards adopting the new lease accounting standard, ASC 842? Unfortunately, a staggering 1/3 of private companies are still not prepared to make the transition. This creates massive pressure to retroactively learn the ins and outs of the lease accounting standard and organize lease details in advance of the initial reporting period under the new standard. Further, rushing through this increases your risk of misreporting lease information, which can ultimately result in significant negative consequences, such as a failed audit, increased fines, and/or fees. Visual Lease wants to help you prepare to confidently achieve and sustain lease accounting compliance. We know businesses in the hospitality industry often have hundreds or thousands of leases, which contain complex, lengthy terms. And after you accomplish initial adoption, these leases must be continually tracked to maintain compliance with ASC 842. We are joined today by Crystal Tedesco with Visual Lease, who will be the moderator of today's session.
Thanks so much, Brittany. Hi, everyone. As Brittany mentioned, my name is Crystal Tedesco. I'm on the marketing team at Visual Lease, and today I'd like to welcome everyone to the webinar, and I'm also going to be introducing our speakers. So today we have two great speakers. First, we have Joe Fitzgerald, Senior Vice President of Lease Market Strategy at Visual Lease. With more than 20 years in finance and lease accounting consulting, Joe informs our product roadmap, deepens strategic partnerships, and supports go-to-market strategy. Next, we have Matt Watson, Director of Implementation Services at Visual Lease. With more than 12 years of experience, Matt is responsible for ensuring Visual Lease customers receive a positive initial customer experience and successful platform adoption. Prior to his current role, he was responsible for managing customer implementations at various software companies. Now I'm going to pass it off to Joe, and we'll jump into today's objectives.
Thanks, Brittany and Crystal, for those introductions, and thank you to everyone who's taking time from their busy day to join us. So the plan for today is we're going to first provide a very high-level overview of ASC 842, accounting for leases. And from there, Matt and I will lay out some of the best practices we have developed from working with over 1,200 customers to achieve compliance with the new lease standard. And then finally, we will share some of the lessons we've learned in order to help those folks listening in to prepare for the journey ahead. But first, I'd ask Matt to tell you a little bit more about who Visual Lease is. Matt?
Thanks, Joe, and thank you again for everyone attending today. Excited to be here. Start off giving a bit of background on Visual Lease. We're the #1 lease optimization provider in the industry. We help organizations become and stay compliant with FASB, IFRS, GASB lease accounting standards, while also improving the financial, legal, and operational performance of those leases. We'll talk a little bit about that today in more depth. Our easy-to-use SaaS platform, it's embedded with more than 3 decades of best practices from major corporations and leading industry professionals, both public and in the private sector. Our award-winning solutions are used by over 1,000 organizations to manage over 500,000 real estate, equipment, and other leased assets. So again, just a little bit of background on Visual Lease here. So with that being said, I'll pass things back over to Joe, who will go through a little bit of an overview of ASC 842.
Hey, thanks, Matt. So before we get started, let's take a step back and look at lease accounting from a bird's eye view. Really, what's the purpose of this lease accounting standard, right? So its purpose is to provide visibility and transparency, as well as increased disclosure into lease obligations for both public and private organizations. This is incredibly complex to do, and many companies underestimate the time, effort, and tools required to do so. So let's take a look at some of the significant changes introduced by ASC 842. Prior to 842, most leases were not included on the balance sheet. 842 now requires companies to report right-of-use assets and liabilities for almost all leases. These changes make it easier for users of financial statements to see a company's true exposure to risk in its leasing activities, thus providing a more complete picture of the financial position of the organization. as well as allow readers of the financial statements to make comparisons between organizations. So the big change is that under ASC 840, operating leases were unrecorded liabilities off the balance sheet, while under ASC 842, operating leases are now being brought onto the balance sheet as a right-of-use asset along with a related lease liability. This includes all operating leases except for short-term leases, which we really define as leases that are less than 12 months. However, there is really no change to the income statement, given that operating lease expense is still straight-lined over the lease term. So what I'd like to do is just to go through one kind of really high-level brief example to show you the differences of operating leases between 840 and 842. So if you look at the screen there, you'll see that on the left, you'll see a balance sheet representing ASC 840, and on the right, a balance sheet representing ASC 842. For this example, we have a single operating lease. It's a real estate lease with an initial lease term from January 1st of 2018 to December 31st of 2025. The rent starts out at $27,000 per month and increases 2% each year until it gets to the final amount of $31,014. For the sake of simplicity, we do not have any prepaid rents, initial direct costs, or lease incentives on this lease. As you can see, under ASC 840, we have a very small deferred rent balance of $23,610 as of 12/31/18. Our total assets are only $9.8 million, and our total liabilities are only $5.5 million. Realistically, though, we have future cash obligation to this lease of almost $2.5 million. But the only way that we would see this is if we dug into the financial statement footnotes and looked at the 5-year table. Even still, this is not a fair representation of our actual liability due to the time value of money. Now, if we look at the same lease example and use the 5% discount rate to account for the time value of money, you will see that the effect this has on the balance sheet under 842. We are capitalizing this lease as of 1/1/18 and not transitioning just to give an apples to apples comparison of the two standards side by side. Our net present value of payments, which is your starting point of your lease liability, is almost $2.3 million now. As of 12/31/18, you can see that we have a total right of use asset of $2,046,000 and a total lease liability of $2,069,000. Our total assets for the year went from $9.8 million under 840 to $11.8 million, so a $2 million increase under 842, while our total liabilities did the same thing, as they went from $5.5 million under 840 to about $7.6 million under 842. You should also keep in mind that this is really just for a single real estate lease, and the lease term is only 5 years. If you really were to extrapolate this out to the entire portfolio and also capitalize any equipment leases you may have, this number will be much higher and much larger. Next slide, please. So up on the slide, it says a lease is a contract or element of a contract that conveys the right of use of an identified asset for a specified period in exchange for a payment, and that it includes real estate equipment such as laptops and vehicles, as well as other tangible assets. What I'd like to highlight is the term or element of a contract. This is where we get into what is commonly referred to as an embedded lease. An embedded lease is an agreement that, while it doesn't say lease at the top of the document, it does in fact have a tangible asset inside the agreement that is in effect being leased. Next slide. One of the good things to come out of the new lease accounting standards is that it encourages organizations to adopt a centralized view of their lease portfolio. This in turn gives them an opportunity to prioritize a proper lease management strategy. And this also provides them with much of the information they require to remain adaptable. So with that, let's do our first polling question.
Okay, our first polling question here. How many leases does your organization have? 0 to 25, 26 to 99, between 100 and 499, 500 to 999. Does your company have 1,000 or more? Is this question not applicable, or are you unsure? Please select one.
So majority of the folks are 25 or less. So that's a lot of small portfolios out there. Not terribly surprised by that, Matt, given where we are, how late we are into the year, right?
Yeah, absolutely. Absolutely. Yeah, so during this next section, we go through a quick review of how to achieve and sustain lease accounting compliance. First, before we hop into that section, we're going to go through another polling question just so we can understand a little bit more about the landscape.
All right, polling question number 2. What stage are you in on your compliance journey? Please select 1, education and planning, software evaluation, solution implementation, go live in transition, or lastly, operationalizing and sustaining.
Okay, so yeah, again, very consistent, not surprised. A lot of small lease portfolios, a lot of folks in the early stages. What I will say is just because you feel you have a small lease portfolio, please recognize that this is not just a day one issue. As you'll find out, there's also day 2. So you may find that if you're planning on, for instance, not leveraging a third-party technology for the lease accounting going forward, you may find that Excel will have some challenges handling the dynamic nature of your leases. But with that, what I wanted, Brittany had to open up our conversation, mentioning some statistics, and I kind of want to build on that. So Visual Lease did a survey and had some stats I thought you might find interesting. So presently, nearly all private companies, or 98%, have started to transition to ASC 842, which is a good thing. I mean, here we are, the end of September. Again, this is the first fiscal year that private companies have to report under the new standard as of 12/31. But surprisingly, 1/3 of those entities are still not fully prepared to transition to the new standard. So 1/3 of the, almost 100% are started, and still 1/3 are not fully prepared to transition, even though we're late in the game, right? So this points to the pressure organizations are under as they scramble to gather and organize the details of their leases before their initial reporting period, right? Which is going to be, they're going to have to do their financial reports as of for probably the first quarter, like March, April, May. You'll have to deliver your financials for 2022, which will include adoption of the new lease accounting standard ASC 842. So despite the private company market making progress toward lease accounting compliance, many companies are not yet there to successfully achieve and maintain compliance. And this potentially opens them up to the risk of misreporting the lease information and not being able to properly comply with GAAP.
Thanks, Joe. So we'll spend a little bit of time talking about establishing a project plan and timeline. As I'm sure you're all aware, there's a lot that goes into the lease accounting preparation. To ensure it happens all before the effective date, you must plan out all the tasks that need to be done beforehand. At a high level, this includes creating a project charter, followed by a project plan and overall timeline. Not just if in the fact you're choosing a software solution, but there really is a lot of change management that happens as part of this new adoption. So really thinking about what that project plan and timeline looks like is going to be key. You need to consider all the activities, especially the ones that require a great deal of lead time. These activities can include gathering lease documents and abstracting, and then eventually validating all the data elements that are required under this new lease standard. Also, you really want to make sure to factor in enough time to evaluate technology solutions. And once you have one, you need to account for the time it takes in order to get that solution up and running with your lease data. If there's one common thing we have heard from our clients over the past several years, it's really that they wish they planned further in advance in order to have the appropriate amount of time to work through this initiative. For instance, if you need help in developing that project timeline, I know we here at Visual Lease host a monthly webinar that walks through each step of what it takes to actually implement the software, do that change management that I mentioned before, and really get ready for that overall adoption. With that being said, I'll pass things back over to Joe now, talk a little bit about creating that internal project team, which is going to be very important.
Thanks, Matt. So companies, regardless of whether your portfolio is large or small, it's typically diverse, right? Meaning real estate and different equipment types. And you're most likely to have lease contracts that can be scattered across any number of separate resources across the organization. So this really can result in different departments and resources being overlooked and then creating an incomplete picture, if you will, when you're trying to gather all your leases. So try to work across internal teams on lease document collection, data collection, because it creates visibility across the organization for the project itself. It also streamlines the process and positions the accounting team as a strong partner to the business. So really gathering all the key stakeholders is critical, right? Such as real estate, legal, IT, procurement, you name it. It's I would say get a boat and go down the hall and get everybody in the boat. And then you've got a complete team. It's really the first step in starting the project. From there, this cross-functional team can get to work locating all the organization's leases and capturing the related lease accounting data that's going to be needed for ASC 842. And doing this while you're evaluating which software to use will give you a head start on the project and help you keep things moving forward as smoothly as possible. Because why this is like any other project, you typically think one foot in front of the other. There are some things you can start to do in parallel, such as gathering data and working on looking whether you're going to need a solution, a technology to support your lease accounting adoption. So some questions to ask on the people front. Do you have sufficient internal resources? And what who will be responsible for and for what? And will you need to hire third-party consultants? So one of the things to think about when you talk about do you have sufficient internal resources, what I will say is that everybody's got a day job. So unfortunately, like it or not, that adopting a standard like this is kind of like a second job. So you got to think about whether you've got the resource internally to do that, or dropping down to will you need to hire third-party consultants? Do you need to hire folks in the abstraction to do some abstraction for you, maybe some accounting advisory? Project management, we've seen this very often. All three of those categories are rather common with a lot of the customers that we work with. And the other thing too is make sure who's responsible, not just in general, everybody knows their roles, but who's going to take the lead. We often see that folks taking the lead on this project typically come from the accounting department, accounting and finance area. With that said, let's go to the next slide, please. So not to get your vision all blurry here, but we've got a circle here with a lot of things to consider as you're thinking about the lease accounting standard, right? So it should be obvious by now that adopting the new lease accounting standard requires cross-departmental collaboration. There's no question about that. So involve your key internal players, as well as any external vendors or service providers from the get-go to ensure visibility and accountability across the board. So once you get the right stakeholders involved and aligned, here's some questions to ask. How does your company acquire your leases? Do you have real estate brokers you need information from? And we see that very often. A lot of companies have real estate brokers that work with them on their real estate portfolio more from an operational perspective, but that's a third party you need to bring into the project. Procurement teams whose workflows will be effective, you need to consider that. Real estate teams, internal real estate teams now, who may need to report differently, maybe more timely as well than they had in the past, as it's going to be part of the lease accounting project. How does your company negotiate lease terms? And how do you effectively surface those terms? Because things like end of term options now become much more important than they did under ASC 840. They're much more important to focus on and think about and make judgments on under 842. And do you have the document management systems you need to connect to your lease accounting technology? Or perhaps legal or underwriting teams that will need to interact with your technology, right? So if you have the legal and underwriting teams and they need to be involved as well, how are you going to keep them abreast of what's going on? How does your company make decisions throughout the year when it comes to leases, right? Maybe you haven't even given that any thought up till now, but going forward, that will be a very important thing to know is how they're making decisions on the leasing, not just the lease versus buy, but once you lease, how that's going to flow through the system. Who needs the information from the system? Who needs to record changes? Again, I mentioned real estate quite often because folks typically have a real estate portfolio. And while it may not be the most number of leases, it's typically the larger part of the obligation for most companies. So you really don't need to make sure that the real estate folks know when and how they need to make the changes into whatever system you're going to use and notify accounting. So you get that proper lease accounting under ASC 842. How does your accounting team get notified when other teams add new leases or make lease changes, right? Again, I just mentioned real estate, but also on the equipment side, you have an IT department that maybe handles laptop acquisitions, right? And leasing of laptops. Do you have a fleet management team that handles vehicles that you need to consider? How does your team validate or reconcile lease payments against lease terms? What I will tell you is what we've seen is the adoption of lease accounting under ASC 842. It's often not it's usually the case that the company will not change their accounts payable process. So you'll need to think about reconciling what I call cash in accounts payable versus as assumed coming out of your lease accounting process. So think about that as well. And how does your business make the strategic decisions about renewals and asset use? Right, again, so like I said, so the renewal process, right, the end of term options are now going to be much more important, and the judgments around those, because it will impact the lease accounting under ASC 842. And do you have the information you need to decide whether to scale up, scale back, or reallocate resources and manage the financial implications of those decisions? Let's go to the next slide.
Thanks, Joe. So we'll talk a little bit about software and those choices that are made in terms of some of the lessons we've learned here. So our research, we found that private companies that are not using third-party software expect to spend around 1,600 hours just gathering the necessary lease information. So while gathering all those lease documents and abstracting can be a time-consuming process, it is essential for lease accounting compliance, as companies are unable to accurately report on these leases until they really have a firm handle on the details within their agreements. One interesting stat that we've recently seen, a survey by PwC found that 39% of companies manage their lease agreements and related accounting in a decentralized manner. This could obviously even be further complicated by COVID, disrupting and decentralizing processes even further. It can really become time consuming and greatly increase the chance of human error during this data collection process. This will be one of the things I can guarantee your auditors are going to test when they come in and perform that year-end audit. We received a lot of that feedback with some of the public entities that we worked with back in 2018, 2019 timeframe, and really have applied some of those lessons learned to some of the clients that we're working with today. Companies have trouble ensuring these lease portfolios include every lease they need. We often find that non-real estate leases, such as vehicles and IT equipment, tend to really become somewhat decentralized in the organization, not always readily available, while real estate leases tend to be centralized in the organization. So really one thing to really keep in mind here as you're doing that research. Our recommendation, I think I mentioned before, getting started as early as possible. If you've not done so already, begin working with some of those cross-departmental teams to locate all those leases and related data. So those setting up a centralized lease portfolio, public companies were able to streamline and optimize global reporting processes and track lease data in real time. This move centralization has shown proven benefits for lease accounting compliance. By having all the necessary lease data at your fingertips, these organizations experience a faster, more efficient, and lease compliant process while also uncovering cost savings, which was very interesting. Including payments, unreceived lease incentives, while also creating efficiencies and an overall reduction in costs. If needed, one of the things that we recommend, consider outsourcing lease abstraction to a third-party abstraction company that can assist you in this process. So these organizations focus on taking your actual lease agreements and all the necessary documents that come with those leases, and they'll be the ones to actually pull the information out, get it into the software, and really make sure it's streamlined for you all. So a lot of things to consider there. I'll pass things back to Joe now, who's going to review assessing lease accounting technology software.
Hey, thanks, Matt. Yeah, so here at Visual Lease, we have something called the Visual Lease Data Institute, and we are always out there, I like to say, taking the temperature of the market. And one of the surveys that we did, where we surveyed 500 senior finance and accounting professionals of private companies, was really to get around their concerns in potentially misreporting company lease information. And what we found is it was a staggering 99% of those folks surveyed had that concern. So up on the slide again, you'll see that the common top concerns associated with this misreporting lease financials, and that were mentioned, and they include, and I'll give you the percentages around it. So 51% noted increased audit fines and fees, right? So that's probably obvious, right? 49% called out damage to the company's reputation. 48% spoke to risk of legal action, and 44% noted damage to the individual's own professional reputation. So those are pretty high percentages across the board. So this really points to a critical need for automation through lease accounting technology. Software can solve for this need through automated calculations, and they do reduce the risk of manual error, and through audit trail functionality that ensures every change is recorded and is fully auditable. And one thing I want to say before we go to the next slide is under ASC 840, most companies leverage Excel or a spreadsheet to do their lease accounting. What I will tell you is that at Visual Lease, we've worked with over 1,200 companies to adopt ASC 842, and a number of those companies will provide an Excel spreadsheet as part of that process of implementing Visual Lease. And we found a lot of errors or just omissions in those spreadsheets that have been existed under 840. So just again, keep in mind that moving to a lease accounting technology that's tried and true is really is not a bad idea, because it may help you fill in some of those gaps and some of those concerns that you have. Next slide, please.
Yeah, a few more things to share here. Up on this slide, you'll see a few of the suggested things to consider when getting ready to assess and choose a technology solution. On a basic level, you'll absolutely need a centralized lease accounting and management process, as well as reliable security and controls around that process. I can't stress that enough. Really, defining what that process is or how you want that process to work within the software is going to be key. Certainly, we've seen a lot of the clients that we've worked with in the past have solidified that process prior to selecting that technology solution, and really allowed for a little bit more of a streamlined implementation process. Other things to consider is, what does day two accounting look like while you ensure you're maintaining compliance? Tenant improvement credits, identifying redundancies, and vendor management are really some other areas that are often overlooked that I know are very important to a lot of organizations here. We can move on to the next slide, and Joe will go through a few more lessons learned here.
Yeah, thanks, Matt. Just before we go to the next slide, or just before we talk about the next slide, I just wanted to kind of touch on one thing when we talk about day two. And we've seen this often, right? So a lot of folks think this is a one and done. We call it day one, right? The initial transition. I can't tell you how many customers we have now that adopted, again, either with an Excel or maybe another solution. It was more of a calculator, and then recognized that there's this whole day two issue that's out there, which is really if you read the standard, you recognize the term, modifications that result possibly in a subsequent remeasurement for accounting purposes. Happens often, particularly again on the real estate side. So I don't think folks truly appreciate that as they're going through this process for the first time. It's a big, heavy lift just to get everything transitioned, and they don't really do the scenario testing on day two, things that might come up. So just keep that in mind as you're going through the process of adopting the new standard. So with that, look, thankfully there's a way to improve productivity, right? And again, namely, it's using technology to help streamline those efforts. Having a centralized system of record can help you organize and maintain control over your leases while creating many efficiencies along the way. In fact, both private companies and public sector entities have reported that third-party lease accounting software has helped them do a number of things, including replace and streamline essential manual tasks and improve accuracy through automation, keep employees aware of the rules and regulations, introduce a new level of customer service, and support available to internal teams. Sorry, here I lost my headset here. And reducing the risk of misreporting company lease information. And one thing I will say, I just want to touch on something else here before we move on, is that one of the things I tell folks as they're looking at the future state of ASC 842 is to think about your current state. And I have this thing about evaluate your current state under 840, look at what you got to do under 842, and then identify the gaps. And what I've known, again, I know this because I've been doing this for a long time, a lot of those gaps that exist now under your current state and trying to support your future state can be solved with the use of third-party technology. And some examples of that lease classification would be an example. The disclosure reporting that's going to be required under 842. I mean, literally, if you look at your footnote now for the 5-year table, it's probably a quarter of a page. I've seen footnotes now under 842 for companies that have adopted going to 2 pages. So think about that. And there's a lot of what we call quantifiable disclosure reporting requirements that it's almost impossible to track and accurately report on those using a spreadsheet. So just keep that in mind as you move forward, because there's, again, and because there's so many advantages, private companies that moved to technology were able to save on average 600 hours, and public sector entities were able to save 765 hours by using third-party lease accounting software. Let's go to the next slide, which I think is a polling question. Next slide's polling. There, thank you.
There it is. So polling question number 3, which of the following, if any, do you feel are benefits to using lease accounting software? Please select one.
And
Here are
Matt,
the results.
thanks, Crystal. And Matt, you know, right, working with so many companies through implementation, right? I would think that when somebody comes into the process and then when they're on their way out, I know you and your team get very high marks from customers, and they must recognize how much you're going to, the system's going to help them, right, with some of the things they've been doing manually up to this point.
Yeah, absolutely. I definitely think over the past 2 years specifically, that third option there, automating essential lease accounting items, it has become very, very important. I think, taking out human error out of the process, ensuring all the data points are accounted for correctly, certainly at everyone's top of mind right now. So we'll move on here. Just wanted to highlight a few of the hospitality organizations we here at Visual Lease have recently helped. One organization that we recently worked with, I believe late last year, was Planet Fitness. Planet Fitness was, prior to coming to Visual Lease, was managing their portfolio on Excel, had a very decentralized management of those leases as well. So think about all the different locations, managing, their own real estate lease, possibly some equipment, possibly some IT items as well. They did have to cobble together many different Excel spreadsheets, and it really made for a very hectic end of month process when it came time to book journal entries and really just do the overall month end process. So we worked with the team, and once the software was implemented, it helped with the centralization of data and ensured controls around the process. They not only became more efficient, but also became very confident that they had the appropriate data needed for their process, which is really key. That those controls, and I know some organizations where SOX compliance is important. Having the software in place to help with some of these things really helps the auditors do their job when they come in to do their process. So a lot of things to consider here. But I'll pass things back to Joe to finish up talking about a few more interesting data points here.
Thanks, Matt. And I always like when we talk in this sector, particularly because I recognize so many of the names, right? We all can relate to so many of the companies here on a kind of firsthand basis, unlike maybe some other industries where we don't have, kind of firsthand interactions with those companies. So really the next part here, what we want to talk about is, and the way I position this is I can talk to you about how to turn the cost of compliance into a profit center, for lack of a better way to describe it. But really what we've seen is there's mistakes that occur, right, have been occurring in the leasing process for years that really under ASC 842, we're hoping that it shines a light. And we're seeing that now with particularly our publicly traded companies that have adopted, and now they're really got 3 years under their belt. A lot of them, they did 19, 20, 21. Now we're in 22, right? So they've got 3 plus years under their belt. But they're finding that there's what we call kind of lease optimization. Now that they're sustaining compliance, they're really recognizing that there's money to be saved in the leasing process that they never would have realized had they not adopted ASC 842. So a couple of examples here, just got a few examples I'm going to run through. So, in the first one, a company lost $105,000 because they did not realize that the lessor was continuing to bill expenses for surrendered property. very common. I hate to say it, but when folks are gathering all their leases and getting into a system, they realize that they're in fact been paying for leases for equipment they no longer have control of. Sometimes they don't even know where it is, which is kind of crazy. So just, one example that we've seen firsthand. Another example is a company lost $185,000 because they didn't realize the landlord needed to offset operating expense increases against tax decreases. So look, we talk about the common area maintenance activities, right, on a property. They're typically kind of peripheral to the base rent, but there's a lot of expenses related to real estate, particularly, that you've got to read the fine print of your leases, and folks are now doing that as they're adopting ASC 842 and recognizing that there are certain entitlements and certain things that have not been done properly in the past that need to be reevaluated as part of the lease agreement, right? And they're coming to light because they're now putting everything into a second central repository. They're reading all the leases. They're doing the accounting, which all has implications to what they're finding in the savings. Another example, and this is a big one. A company lost $500,000 because the tenant forgot to request reimbursement for tenant improvement credits from the landlord. I love this one because it's really simple. And I got the example. What happens here is it's not unusual where a tenant will lease a space and the landlord will say, hey, look, we'll give you $30 a square foot if you build it out, and we'll pay you when you're done. Just make the request. And what happens is the way the tenant works is that process, they do all the build out, but along the way, the right to request the money back from the landlord, that gets lost. Nobody's tracking it. So now under the new ASC 842, these tenant improvement credits actually are factored into the right of use asset. So now for the first time, they have to be tracked, right? And as a result, they're bubbling up and folks are realizing that they never wrote the final letter to the landlord saying, hey, we completed the project, send me my check. So here's a real example of where that's happened. So something else to think about. The last one I've got on the page here is one where a company lost $210,000 because the tenant was not aware that the tax abatement was not being added back to the tax base amount. So again, it's another thing where it's kind of the nuances of the lease. You've got your base rent, but you've also got what's called a base year. And sometimes your common area expenses they include taxes, sometimes they don't. So you really have to take a hard look and peel it apart to see what you're entitled to, what you're getting charged for. It's not uncommon that landlords will charge the tenants for things that they really aren't responsible for. So there's another example that unless you're reading the lease and going through with a fine-tooth comb, you wouldn't realize it that were entitled to this adjustment. So there's just 4 examples, and we've seen like hundreds, if not thousands, of examples over time. With that, I think, Crystal, are we going to another polling question?
Yes, we do. We have our last polling question of the day. All right, here it is on your screen. The question is, which of the following are you interested in learning more about? Please select 1, implementing a centralized system of record for your leases, integration capabilities and implications for lease accounting, benefits of strong lease management, or leveraging lease data for strategic planning. Please select 1.
So Matt, given where you sit and all the customers you work with, which would you figured would have been the top choice?
Yeah, I definitely think the first one, implementing a centralized system, but I do like to see the second one there, where a lot of folks are interested in the integration capabilities. I mentioned this before, especially over the last 2 years, specifically with all the things that have come with the COVID environment and so forth. I think a lot of organizations are focusing in on how can we automate our processes and movement of data between the different software solutions that we have. So working in a system, like Visual Lease, for instance, there's certain information that's going to be eventually needed for an ERP or general ledger system, or maybe there's information in a real estate specific system that needs to make its way into the ERP. So I think it's interesting to see some of the stats there around some folks interested in the integration capabilities, because I could tell you a lot of the clients that we work with in implementation, we're seeing it become more and more prevalent. And even, customers that we worked with back in 2018, 2019 that, maybe said, hey, you know what, I'm going to handle this a little bit more manually. I'm just going to use the software to get my journal entries, and then I'll eventually book my journal entries into my ERP. They're now coming to us looking for that efficiency for an integration between the two systems. So yeah, interesting to see some of the data points there.
Yeah, that's a natural kind of maturity, right? We see. I always say that one of the things I encourage folks to do when they're planning the project is to bring the IT folks in, right, for that integration up front. Oftentimes it doesn't happen, right? And with the IT folks, if you don't get on their schedule for the resources, you're not getting integrated the first time through, right? So then it's kind of going to the next year. So we are seeing a lot of the companies coming back, right, subsequently, and wanting to do it as kind of like a phase 2. The other thing you mentioned, COVID, and you and I both know it was amazing how many of our customers that had adopted lease accounting were able to leverage the system because they were going into negotiations with their landlords, right? And so because they've got all the leases in a central repository, they've abstracted all the clauses, they were so much better, and they knew all the lease rates and the renewals. They were in such a better position to go to their landlords and start to negotiate. And we saw hundreds of thousands of modifications that took place in our system across our customers during that, what I'll call that 2-year period during the pandemic. So yeah, it was really very interesting. I always say that lease accounting, that was one of the good things about lease accounting. We weren't planning on a pandemic, and hopefully we never have one again. But the fact that those adopted lease accounting were able to get the benefit of everything kind of in one place now.
Absolutely. One other thought on the integration items for the folks that had said they were interested in that is, as you're planning that project team, if maybe you have already adopted, or maybe you're getting ready for adopted and you're thinking about that project team, have those conversations with the folks in, whether it's your IT team or whether it's maybe there's a specific team that handles the maintenance of the ERP. Talk about what does the new process for adoption, moving to the new standard look like. What's going to be important for you to get information into the ERP, and ask them, say, hey, here's what I'm planning on doing. What are the best options? Here's what the provider has. Maybe the provider does offer integration capabilities, whether it's through the API or whether it's a flat file exchange, what have you. So starting those conversations early, it's only going to help you better be prepared for this process. And, like Joe mentioned, walking down the hallway and having everyone in the same boat, having those conversations early is certainly going to help you out longer term.
Yeah, Matt, one of the things, well, again, that last slide's a lot, the polling question, but data. I've got this term I use, which I've used often, is data is the long pole in the tent. And folks don't realize that, right, till they're knee deep in it. And the one thing I'll say is that a lot of the data that I know from experience, half the data elements you need typically come from lease contracts, and the other half come from really its judgments and other places, right? So one thing to think about is when you're going through your lease agreements and doing that abstraction, you need to think about the folks who are doing the abstraction have the necessary skills to pull those data elements. And what I mean by that, do they understand the leasings they read, the real estate? Do they understand leasing? Do they understand accounting, right? Do they understand ASC 842? That's really important to make sure that they get the data elements that are relevant for lease accounting. And because I've seen a lot of abstraction projects have to get redone because I hate to say it, the company hired interns, temps, no oversight, told them to pull the data, and then they found out, like the term garbage in, garbage out, right? But they populated the system and then recognized that they weren't getting the right results because they didn't have the right data going into the system. Just something else to think about.
Absolutely.
Crystal, any questions?
Yes, we do have 2 here. So the first question, how can I easily identify embedded leases?
Oh, well, that's a good question, because there's no necessarily easy way to identify an embedded lease. I guess one thing to think about is in the industry, do you have any what I call razor blade arrangements? And what I mean by that, I'll give you a healthcare example. So in the healthcare industry, it's fairly common that a provider of some kind of a, let's say a CT contrast will give you an injector. So an injector is a tangible piece of equipment. They'll give you that injector, and then what you have to do is you have to agree to buy a certain quantity of the contrast over a period of time. So let's say a 3-year, it's a purchase arrangement, right? But really what you're doing in effect to a certain extent is you're buying the contrast, but you're also leasing that injector. So I call that the razor blade, right? They gave me the razor and they want me to buy a lot of razor blades. So I would say any situation in the industry that you have that type of thing, it's most likely that you've got a lease, an embedded lease in that arrangement. And then what you need to do is you need to establish standalone selling prices between the razor and the razor blades to figure out what the value of the razor is, and then to look at it from lease accounting. The other thing to consider is, materiality, right? Just because you then maybe have an embedded lease, there doesn't mean it's material and rises to the level where it has to be included in the right of use asset. But you need to do those evaluations because your auditors are going to want to see that in their during their audit. Another example would be where you outsource the manufacturing of something. Right, another example I've seen fairly often. You outsource the manufacturing of something, and the company they outsource to always uses the same equipment to do that manufacturing process. And you, as the company that's getting the work done for you, you have control over that asset. So the control is another aspect. So if you have control over that asset, you may in effect think you have an agreement to, a contract arrangement, but in effect you're leasing that piece of equipment under the ASC 842 standard. And again, it's interesting. The embedded lease concept is not new, but it really wasn't focused on under 840. But now under 842, it's really risen to a new level because of the on-balance sheet aspects. Matt, anything you want to add on that?
No, I think that's a great explanation of those embedded leases. I think the one thing I'll add on is identifying or trying to identify them as early as possible. When you're going through the implementation of a software, let's just say you want to have all these things taken into consideration so that when you do build things out and you build processes out, you know what data is going to need to be collected. It does sometimes take a little bit of time to find those embedded leases. Maybe you have to talk to different stakeholders within your organization that manage these portfolios. So trying to find at least a good lion's share of them is key so that you can make decisions on how you want to implement things and how you want to set things up longer term.
In this industry, as I think about it, Crystal, any management arrangements that you may have, maybe it's around food service or something else, some other aspect of the business where you're outsourcing to a third party under a service arrangement, but in fact that third party is bringing along tangible equipment. The tangible equipment could in effect be an embedded lease. So that would be something I would look for if I in this hospitality space.
Great. Thank you so much, Joe and Matt. A few more questions that came in. Next question here is, I have about 25 leases and I do not see that growing. Can I do this on Excel?
The answer is certainly you can, right? I mean, that's what you've got now. The one thing I always encourage folks to think about is what I call on the way in and the way out. So on the way in, meaning as a lease comes on, you say don't see it growing, but as leases are evaluated for classification, right? Do you have a way to do the classification between finance versus operating leases and an amortization schedule? If you can do that on new leases, that's fine. You can do that in Excel. The other thing though is I would read the standard ASC 842. There's a page in the standard, I forget what, it might be page 135, I don't want to have that in my head, that actually lays out all the quantitative disclosure reporting requirements. There's a long list of numbers that need to be calculated under the standard for disclosure. Some of those numbers are not that easy to calculate using Excel, particularly when you get around weighted averages of interest rates, terms, et cetera. So what I would say is take a look at that because your disclosure reporting will grow dramatically under 842 and just see if you can satisfy tracking and quantifying all those requirements.
Okay, great. And next question here, which departments should be involved in this project? Joe, I believe you had a slide on this, if you want to take this question.
Yeah, sure. So I always, Matt and I have talked about real estate. I mean, many times during this, that's typically one of the first ones. So accounting and finance, clearly, right? This is an accounting issue. So accounting and finance, I would say the controller's shop, somewhere in the controller's shop, depending on the size of the organization. So clearly real estate, if you have a procurement department, I would say procurement. Legal will need to be involved. If you have a legal team, whether it's internal, external, IT typically involved. There's what call InfoSec. Or even if you decide to get a third-party technology, you'll have to do some information and security activities around that. So you'll have to want the IT folks involved. You're also going to want the IT folks involved because Matt and I talked about implementation, right? If you want to talk about implementing whatever solution that you pick into your tech stack, you're going to want to have the IT folks involved. I would go out and say that, within the operations, there may be folks in the operations that might need to be involved. If you have any other asset classes that are concentrated, example, that would be fleets. If you have any vehicles or trucks and somebody's managing those, they need to be involved in the process early on. If you have anybody, again, IT for, laptops and other servers or whatever, they would be involved. So anywhere there's a concentration of assets, those folks need to be involved as well. Matt, anybody you want to add on that?
Yeah, I was just going to highlight what you mentioned with procurement and legal. I think what we've seen is, especially if you feel like you may have a little bit of a decentralized process today or a decentralized management of those leases today, talking with legal and procurement is definitely going to be, one stop you want to make on the journey here, because a lot of times they may be signing off on something without letting other folks know, or certainly, sometimes it's on a need to know basis. So having them be kind of a pit stop on the journey on identifying all these leases and really when you're thinking about the project as a whole, do they need to be involved with the project as well? Do they have certain needs that they have to be met with, with managing these leases? So definitely highlighting those two departments is going to be key.
Yeah, and one other group that maybe obvious or maybe overlooked is your auditors. And what I will say is we're during the public company run up, the auditors had to take more of a hands-off approach to how they advise under lease accounting, the SEC rules and whatnot, much more stringent around independence. But talk to your auditors and just see to what level they can support you. Maybe it's in the education of and socializing the project to start, but work with them to get their input early on, and then constantly go back for touch points with the auditors. They're going to be key to your success in this as well.
All right, one more question here. What is the number one piece of advice you would tell me and my company as we're just getting started with this process?
Yeah, I'll start. I think it's identifying. I mean, we probably sound like a little bit of a broken record, but identifying the data, finding those leases and really doing the digging within the organization to find all these leases. The one thing we typically advise as well, if maybe you think it's going to take a little bit to find a lot of those leases because maybe there's 15 different stakeholders that each manage a distinct subset of leases, gathering a good what we would call like a proof of concept of the leases, or a good subset, a good representation of the leases. So let's just say you have 100 real estate leases and maybe 500 equipment leases. Maybe focus on at least capturing 50 to 75% of the real estate leases, 50 to 75% of the equipment leases, so that it can lead to better decision making when it comes time to go through whatever implementation or adoption process that you're going through. I think a lot of times, that we've seen in our implementations where, they get to the tail end of the process and then they find out, oh, I haven't talked to, Joe over in procurement yet. And I just found out we have another, 50 to 75 embedded leases. So really trying to identify as best as possible, right? This is not an easy process. So as best as possible, identifying that data up front it's only going to lead to better decision making. And better peace of mind as well as you go through the adoption.
Yeah, that's good, Matt. Yeah, so if I had one now, so assuming most companies are December 31st, and if you're just starting the process now, in my view, I would be a little anxious. I feel like I'm starting late. What I would say is look at the end state where you need to be, March 31st, if that's the day you do your financial reporting, look at 12/31, working backwards to where you are today, and start to think about what you could do to accelerate the process. So there's things that I would be telling you if we were a year out in terms of how to do things, again, one foot in front of the other. And the way I would describe now is, like I said, Matt and I have been around a while doing this. We know some tricks of the trade of how to accelerate the process. There's things you can do in implementation to get done a little more quickly, where you then know you might have to go back after the fact and clean some things up. There's ways to look at how you capture and account for the leases. You start to throw materiality on there. Maybe you have 1,000 leases. Such a granular level, because you could go back, but you know that in order to get there, to adopt the standard timely and report on it, you're going to have to cut some corners, so to speak. Doesn't mean you're not going to have be in accordance with GAAP. I'm just saying you're going to have to think about how to accelerate the process. That would be my advice at this point.
Great, thank you so much. I don't see any other questions at this point, so I'll hand it back over to Brittany to close out the session today.
Awesome. Well, thank you so much, Joe, Matt, and Crystal, for your expert discussion today. And if anyone does have a question, feel free to drop it in the Q&A while I wrap up this session. But HFTP just wants to thank Visual Lease again for sponsoring today's webinar. They are actively offering free expert-led webinars so you can stay in the know of all aspects of hospitality leases. If you are collecting continuing education credits today, please note you will need to self-report your credit for this webinar through the certification spreadsheet. This spreadsheet is available at the bottom of the HFTP webinars webpage. In addition, an email with the CPE credit certification information will be sent within 24 hours of this session. Please save the email for your records. And at that time, let's see, we have just everyone thanking our speakers today. And so we appreciate everyone's attendance. And at that time, this concludes the session. Thank you so much, Visual Lease. We appreciate it.
Thank you, everyone.